All right. Hello, everyone. Let me know if you can hear me and see me well. For those who are joining this live stream, the recorded live stream, jump to about 8 minutes from now because I usually started a little early. And to say hello to everyone, there's quite a few of you here already. Yeah, just type 1 if you can hear me and see me well. Yeah, Rudy is in the living room. He was asleep. Didn't want to wake him up. He's had a busy day in the garden. It's finally been a nice day here. So we've got Alain Roy. We got Uncle Robbie, Scoobyism 3, Music Lover Forever, Andrew Bevan. Nice to see all of you here. Yeah, the title of the live stream is about First Republic. A lot is going on, I think, today. So the latest I heard is that they're trying to get, I think, JP Morgan and PNC to buy the bank. So I'm also going to have Andy Schectman on today. He should be coming in about 5 to 7 minutes. I've invited a few other people. I don't know if they'll show up, but it should be a good live stream. David Otness from Alaska. Yeah, I sent Clive an email. I don't know if he's going to be on. It's a bit late in Switzerland. It's 10 o'clock there, but we'll see. Chris Ferraro from Brooklyn, New York. Scoobyism 3 is a new grandpa. Congratulations. Papa Z having a few drinks, I think. "903 Boater from Michigan. Yeah, we'll ask, we'll talk about junk silver supply. Talking about junk silver, I've got some of a few of my junk quarters here on my desk, as you can see. They're one of my favorites, the quarters. Nice coins. I think one dropped on my seat. Music Lover Forever. Hopefully he will know he is joining a live chat. Rick Bryant, good to see you again. Oh, thank you. Nice to see you here too. Did you watch the video of Gonzalo Lira endorsing Biden? No, I didn't. Matthew White from Melbourne. Oh yeah, there's Clive. He's on the Hi Clive, nice to see you. Don't worry. I guess you can comment here on the comment section. Breakout in gold. Well, gold is the thing about gold that people forget is that it's a currency. I remember when I started out in the business in Switzerland, we did a lot of foreign exchange and we had the Reuters page FX up all the time, and gold and silver were on that page. And if you look at gold in Australian dollars and pounds, in yen, in Canadian dollars, it's broken out comfortably above the 2011 high. In dollars as well, it's broken out above the 2011 highs. And we just closed the highest monthly closing on gold. So we'll look at that too. I've got some charts. How much was the premium on constitutional silver you bought last week? I'm not sure. I mean, he charged me $8 for the £8, sorry, for half dollars, £4 for the quarter. And I had some dimes as well. He charged, I think, £2.50 or £2. So you can work that out. The exchange rate is about 124. Andy, thank you for your super chat. Are the people of the UK getting sick of the royal family? I don't know. I mean, I don't really care much for what's going on. If he was a real king, then maybe I would. And what do I mean by, and thanks for the super chat. What do I mean by a real king? Well, a king that looks after the people, because that's a sovereign. We're supposed to be sovereign individuals, and the king or the queen is supposed to be the head sovereign, but that's gone out the window many, many centuries ago. So it's just a show. It's just a show. Some people, I know there are people that like it and people that don't. I saw a house nearby. They put up Union flags all over it. So some people are excited about this coronation. I think it's on the 6th of May. So that's the way. I mean, I just try to live my life and ignore all the distractions. What do you recommend to buy as a tool to check if gold and silver is real? Oh, 1 second, we got Andy Schectman coming on. Here we go. Maybe we can ask him. Hi, Andy. Hi, Andy.
Hello, my friend. How are you doing?
Good. You came just at the right time because someone just asked a question. If there are any tools that one can use to test, if the gold and silver is good. Have you got anything you use or?
Well, what we would use is different than what the public would use, of course.
Yeah.
And I don't know the name of it, but there are some aftermarket things that you can buy.
Yeah.
You put a coin inside the hole, and if it doesn't fall, that's it. Yeah, those
Yeah,
things.
I've got this one. Yeah.
Yeah, those work. The stuff that we use as a company to make sure that what we are receiving or sending out, if there's ever any question, these machines, these handheld devices cost $25,000. They're ridiculously expensive. They give you a digital readout down to the thousandth of a gram, what is inside, what is composed of. So short of doing that, those types of aftermarket deals, and I forgot the name of, what is the name of that?
It's the I've done a promotion for it, a gold coin scale. So yeah, you can go on.
There are others like it too. There are some that you take a coin, and if it doesn't fit in the hole, like it'll say Krugerrand, and if you put a Krugerrand in there, and it knows by the density, the thickness, all of that stuff. I mean, it's been cleverly engineered, but nothing that stuff like that.
This is from the 19th century for sovereigns.
But that's what it would look like. It's something like that, and that's what I would go on Amazon and buy something like that if you have any questions. But this is another reason to only work with companies that are very reputable and staying away from Craigslist, eBay, anything where you're going to find a great deal, but it's not a recognized company with a great track record. You usually look in all the years I've done this, Mario, I maybe have seen 1 or 2 or 3 counterfeits of any sort whatsoever. So it's not something that we see very often, but certainly we are prepared to recognize it if it ever does happen.
So I guess you have one of these $25,000 machines, so that's good.
Yes.
Yeah,
maybe
and
a few of them actually.
Yeah.
But yes.
The other thing that someone there, because I went live a little earlier, and people want to know about the premium for this stuff. The constitutional silver. I've got like a little quarter here.
Yeah, I got a little bit of a theory on that. I was thinking about it. You got all these states right now that are going with legislation to not only make gold and silver something that will be allowed to be held in the state registry or treasury, rather, not only removing the state income or sales tax, rather, regulations when you purchase precious metals, and even going as far as removing capital gains tax when you sell it. They're basically looking at it as money. But there's several states now that are actually allowing gold and silver to be used as legal tender. Now, a couple of them say any government minted gold and silver coin would be acceptable, but several of them, in fact, all of them, say any coin minted past or present by the United States Mint is legal tender. So you could count those, or the Silver Eagles, and some of them do not say other states. A couple of the states do not say the other countries, in other words. So I'm wondering where the hell all the Silver Eagles have gone, and why all the premiums on the junk silver has gone literally parabolic. At 10 or 11 plus dollars over spot, we'd be cheaper than anyone in the country. Yeah. When you talk about Silver Eagles, they're north of $16 over the price.
How much is a quarter right now?
Right now, a quarter would be, if you let me just look down for a second, I will tell you.
Someone mentioned a magnet. Yeah, magnet, gold and silver are not magnetic. So that's the first thing to do. It's fairly cheap to get a magnet. And if it sticks, then you don't even have to test it because it's not gold or silver.
Right now, a quarter would be today's premium. It would be roughly that per dollar face. So divide that by 4, and there's the price of a quarter. That's what, they're so high premiums. That works out to $6.40.
Yeah, because
right now is what the industry is selling those for.
I paid £4 for this, which is about $5. So that's not too bad.
But the crazy thing to me is that, most of my career, they called it junk silver because it carried no premium in and above the melt value. It actually, I was able to buy it for many years under its melt value, sell it for 20 cents over its melt value, and everybody won in that equation. It was considered very bulky, and most companies really didn't like to hold a big position of it. I will tell you right now that next to the Silver Eagle, there's nothing in the silver community that's more expensive than that. And I guess I just wonder, are people finally waking up here in the US and are following this legislation and say, we got to get some US made silver. I don't care what the premium is. I've been an authorized reseller of the US Mint for over a decade, 15 years. And I will tell you that the US Mint means a great deal to me. I usually only buy American made gold coins myself when I'm buying gold, but I can't in good conscience stomach paying $16 over the price of silver to buy a Silver Eagle, as much as I love them. And junk silver right now at, almost $12 over the price of silver. This is crazy. But this is emblematic of, I think, why they say there's no bull market like a metals bull market. Because, well, in the case of silver, junk silver, no one's selling it, or no one's producing it. It hasn't been made in over 60 years. But they say there's no bull market like a metals market because no one wants to go back into dollars. Even if you can sell your junk silver or your Silver Eagles at a super high premium right now, no one's going back into dollars. In fact, it's only strengthening their resolve and their grip upon the rationale they employed for buying it to begin with. So all I can tell you is that it's been this way for the better part of 3 years on both items.
It's the same thing. Excuse me. It's the same thing here. I mean, I wouldn't sell I have quite a bit of US junk or constitutional because I've been able to get it through my local coin shop. And he always has some, like the last ones I got, it was, they were on a clock and they made a clock out of all the coins. It was a really old clock that wasn't working. So I ripped the coins out of the clock and just bought the coins. But yeah, I can get quite a few here. Probably the premium's not as bad here because it's not coin of the realm, and people don't realize maybe there's an arbitrage opportunity to buy it here and sell it.
Well, I can tell you that that's true, because if I had a bunch of silver coins from the United Kingdom, old ones that would be the equivalent to the pre-65 silver, I would have no clue, and I own a metals company, what it's worth or what it is. And so I would think that, you're the kind of the rare exception of someone who understands, pre-65 quarters and dimes. What is the equivalent in the UK? When did they stop putting silver in their coins?
Well, pre 1920, it used to be sterling 925, and then so after World War One, they took 50% out. So the coinage stayed 50% silver until 1946. And then after World War II, they just took all the silver out. You can buy 20 to 46 coins, and they're 50% silver. There's silver in it, but I have quite a few of the pre-1920 silver coins. They're beautiful as well, and they're really nice. Just wanted to show the viewers, this is the magnet I have. So if you go on the silver coin, it doesn't stick. And you can.
That would have been really funny if it stuck.
Yeah. Well, this is actually
Silver Eagle.
Yeah, I bought it from who did I buy it from? I think it was the local coin shop guy. He had some of these. So I think it was 42 pounds, which is expensive.
Yeah, they're basically numismatic coins right now. In the 33 years I've done this, I've never seen silver eagles like they are right now. I thought they were high right at the beginning of the pandemic. They're higher now than they've ever been, in my career. And it's interesting because Janet Yellen came on the Mint website last year and said they've ramped up production, really ramping up production to provide gold and silver to those who want it. Well, the funny thing is I can remember 2012, I think it was, and 13, when after the market had peaked down and really people were not looking to buy silver, and yet the Mint was making almost 50 million silver eagles. So, it's a situation where certainly they could be making a whole hell of a lot more, but for whatever reason, they're not.
Well, this is, we were talking before you came on about gold. And I said that this is the highest monthly closing ever in dollars. I think it was around 1990, the spot price, and it looks pretty bullish. This is
that comes with the largest commercial bank short position ever.
Yeah.
So the commercial banks are desperately trying to break that wedge there and to the downside, and you can see it by just how concentrated their short position is. Right now, this is incredibly bullish when you see this kind of price action fighting against the commercial banks who usually win these battles. Let's hope this time they don't.
Yeah, and the other thing, I mean, I don't have the charts here, but if you look at the price of gold in pounds or Aussie dollar in yen, we're way above the 2011 highs, and we've broken out as well. And why is that important? Because I think gold is like a currency. So it's showing that it's not just the dollar that's going down versus gold, but all the other currencies. And they're leading the way in terms of getting worse, but the dollar is going to go the same way, I think. And that there's another thing that came out. I think I spoke about Singapore about a month ago. They've been buying a lot of gold, and they just reported they bought another 17.3 tons in March. So they've increased their gold holdings by 45% just in 2023. In Singapore, after the Swiss franc, the Singapore dollar is the best currency in the last 50 years. It's even outperformed the US dollar. So the Singapore Monetary Authority, I think they know what's going on, and they're quite, I don't like to say it, but they seem to be quite on top of things.
Yeah, I think that's one of the things that people need to take comfort in, and, not really, I mean, this almost sounds disingenuous, but it's not. I mean, you can't focus on the price right now. To me, what is happening is classic misdirection. They're really trying to misdirect the public with price. You're seeing the concentrated short position by the commercial banks, like the most they've ever had right now, trying desperately to not allow gold to break out. God forbid it gets up into the 2100 range, and then technical buying comes in and will go way higher. But they're misdirecting us at the same time you're seeing the central banks purchase more gold really than at any time ever. If you look at 2022 as being the second most ever, but look at what they've done subsequently, the numbers are going up 150% or more month over month, or at least they did in January and February. The central banks are like Singapore, like Turkey. They're buying gold and massively accumulating it right now. They are front running it. They are using the suppression of COMEX gold price to run cover for it. That's what they're doing. And don't think that the commercial banks aren't doing the same thing too. They are. And they're all accumulating, I believe, physical, at least some of the smart ones are. JP Morgan, by Ted Butler's estimation, has the largest silver position the world has ever seen off books. And he's talking over 1 billion ounces and over 45 million ounces of gold that they have been using the suppression of COMEX to run cover for. So look, there is a little bit of hyperbole in all of this, but it is fact. The central banks, which not only have the most money, they're closest to the information, they write the playbook. They're finding it very relevant and very important to buy gold and silver right now. And I think that's what we focus on. The misdirection is the easy part. You misdirect price and rhetoric and you can have your way with it. That's been their playbook. But what is betraying that right now is the massive acquisition that just is not abating, like you mentioned here with Singapore.
Yeah. Andy, what are you hearing about First Republic Bank? I mean, it seems to be, the story seems to be changing, quite fluid. The last I hear here, if I go into the FT, it says JP Morgan, Citizens, and PNC submit bids for First Republic because they're trying to not have the FDIC, get involved. So how do you see this? It seems to be spreading because we had Silvegate, SVB, Signature, Credit Suisse. Now we've got this bank, First Republic, and it's one of the top 20 banks in the US by assets. It looks like there's contagion. And how do you think it's going to impact your business?
Yeah, there's no question there's contagion. Why do you think that these banks ran to bail out to the tune of 30 billion already? There is contagion, and with some of these banks, there certainly is. And you mentioned they don't want to get FDIC involved. I don't understand why people don't take a step back for a moment and take a look at the Fed balance sheet and say, at the beginning of 2022, the FDIC had roughly 125 billion in assets, most of it in short-term treasuries, whatnot. And now they just took a loan from the Fed for $170 billion. So the Fed is bailing out FDIC or liquefying them, giving them money. Doesn't that mean the FDIC is a bunch of crap? I mean, if just using the money for Signature Bank and Silicon Valley Bank, if they just use that, they would have been completely insolvent. Why have they borrowed $170 billion from the Fed? And you look at the discount window, which the amount of borrowing from the discount window keeps going up, and they have to pay the Fed a very unfavorable rate. These are banks that need money right now, and they have to post collateral that was owned free and clear before a month ago, and that collateral has to be at par, and they're paying like over 5%, to borrow this money monthly. So it's very unfavorable. It's like, I need money now, I'm going broke. These are banks, there are more coming. And I think the Fed is aiding and abetting it. And you have to ask yourself, why is it that they would have the federal funds rate as high as it is, or the overnight repo market as high as it is? All the money market funds are going into the reverse repo market, which is paying, upper 4%, which is higher than any CD you can get in a regional bank, where Janet Yellen just told us will not be bailed out unless they have a uber majority of the FOMC, the FDIC herself, and the president. And in that case, I mean, if you have lots of money in a regional bank, which, by the way, there's almost 5,000 of them that represent 70% of all the small business loans, the majority of all the commercial real estate loans. This is the backbone of the American economy for many years. And now all of a sudden there's been a fuse lit underneath them. Why would you leave your money in one of these banks where there's systemic risk? And if not systemic, just the risk of what's happening is the Fed is enticing everyone to go into the commercial banks and into the money markets, into the higher yielding assets in a bank that we've been told will be bailed out, because the banks will be bailed out if they're too big to fail. The regional banks, she told us, wouldn't. And so not only are you getting a higher return with daily liquidity in a money market instead of a time deposit CD at a lower rate in a bank that could easily, very quickly, in 36 hours, these banks are going bankrupt. When there's a run on the banks and they are forced to sell their, what used to be considered a safe asset is now toxic, that being the old treasuries at 2% and the mortgage-backed securities at 3%, that they've lost 60% of their value. So, I mean, it's going to happen. And I find it interesting that First Republic is being gobbled up by JP, and because obviously there was a systemic risk there. Why would they have given them the 30 billion to begin with? They're not known as a benevolent industry. So obviously there's something bigger here we're not being told.
I was reading Rafi Farber's Endgame Investor, his weekend report, and I did ask him to come, but he wasn't very well to come on the live stream. But I was reading that the New York Fed is actually changing the rules. They're going to make it harder for the money market funds to be involved in the reverse repo market. So maybe they've realized that is a problem. And Marafi thinks that it could be, he wouldn't want to be in money market funds anymore. So we'll have to see. And actually, I think that could be positive for gold and silver, because if you run from any bank and you go to a money market fund, treasury fund, but if you can't do that, where are you going to go? I think more and more people are going to wake up to the fact that they should think about gold and silver.
Right. Well, and not only that, there's a lesser known legislation that was put into place right after the great financial crisis in 08. Most people, and that's actually shocking how few people, or I shouldn't say few, how many people don't know about bank bail-ins. And everyone's familiar with bailouts. Obviously, what the Fed has been doing here is contra to what we've been told is law with bail-ins. But let's just pretend that we continue to see banking problems. There will be bail-ins instead of bailouts. But they also passed a legislation subsequent to that law that centers around money market gating. A few people know about, and that is that when Lehman went upside down, they had a lot of money markets were invested with them, and everyone tried to yank their money out at once. It's called breaking the buck, where the money market goes upside down, and well, you can't allow that to happen. It's a massive market where people are putting their money there to be safe, and so the Fed, or excuse me, the legislation rather that came out alongside the bail-in legislation was that if this happens again, they can implement money market gating, and they just close the doors. You can't get out. You have to ride this out. So yeah, that certainly should be. It's interesting. I mean, they shouldn't allow it right now, because this is what is creating the exodus, really, in my opinion, really massively creating the exodus out of the regional banks into the commercial banks. And there's a lot of stress out there. I read an article just the other day talking about Schwab, and Schwab is paying on their 1 to 3 month CDs 5.15%, yet the rate that they would get if they just went directly to the Fed would be 4.75. So the fact that they are willing to pay more than they could get with safety, I don't know. It doesn't say much for the safety of Schwab. I think there's a lot of banks here that are cash starved, and the redemptions out of these banks are really, really hurting them, because they would rather pay more by getting money immediately. And the reason they can't go directly to the Fed in this new program they have is that the margin or the collateral they have to post is at par and has to be owned. Can't buy them now. They had to have been owned prior to like March 25th. So they can't go buy bonds right now and post them as collateral. They would have to do something with stuff they've already owned. And the fact that they would offer more than just going to the Fed to the overnight repo market, the safety there of 4.75 is a little bit concerning. I think there are a lot of big banks here that are in trouble, and I don't think we've seen the end of it. Not even really. I think this is just the beginning.
It feels almost like 2007, early 2007, when those subprime firms started keeling over, and it took about 12, 16 months until Lehman collapsed. So this was what I mean. The first was March 10th, I think, or that SVB failed. So it's like 6 weeks later, we're here again. Andy, someone asked, are you working on a book with Robert Kiyosaki?
I am working on a book with Robert Kiyosaki, and it's very difficult. Writing is not my forte. So I am trudging my way through it best I can on the limited time that I have. But yeah, I am.
I guess it's about precious metals.
It is. Yep.
Okay. So there you go. And the other, do you deal in platinum and palladium? Is that something big? I mean, people always ask me about platinum mostly, and I say, I follow it a bit, but I'm more into gold and silver, and I know platinum is a precious metal.
Yes, we do deal in platinum and palladium. I think platinum has a compelling argument, but I think when the world looks to protect itself, it looks to gold and silver before it does platinum and palladium, although the arguments are similar to silver with palladium, although it doesn't have as big of an industrial footprint. It's mostly used in catalytic converters for diesel engines, and it's also used in electric vehicle componentry. But I think that the real value it would be platinum over palladium. To me, it's too expensive. Again, both of the supply side arguments for them is that the majority of the supply is found in South Africa and in Russia. So getting getting product is we've hardly seen any platinum produced by the mints over the last decade. So it's compelling, but I think for me, it's gold and silver first and foremost. When we talk about capital preservation, they have a history all the way back to biblical times as wealth and as money. And you don't see that platinum and palladium, more of an investment.
I think platinum has only been around. I mean, it was just found about 200 years ago. And the name, it means small silver in Spanish, platinum.
And it's probably 30 or 40 times more scarce than gold, but and it's upside down in its historical price relationship to gold. So it's compelling, but to me, it's a distant third in behind gold and silver in what we sell and what I would own myself.
So I have a friend in the US, and he's in the East Coast, on the East Coast, near the District of Criminals, DC, and he's a big investor, and he told me he got this because he's got a lot of investments in these ETNs, which are exchange traded notes, and Credit Suisse was huge in this. And this is just an interesting story here because Barclays is quite big, and they're actually redeeming all their ETNs by June 14th this year. So if you thought you own, let's say, cotton, sugar, or even precious metals with Barclays, you're going to get cash. And I think this story, this is quite interesting because they're giving an excuse that something happened with their ETNs and they're going to close everything down. But I have a feeling maybe if they didn't think commodities were going to have a massive bull run, they wouldn't be doing this. because what this means is that Barclays has the other side. People are long these things, and they're hedging, and this is not real. So this is similar to all the ETFs as well, I think, and all the gold and silver futures. So what do you think, Andy? Am I reading too much into this?
No, I don't think so at all. I don't think so at all. I think they realize that, we're entering a period of time where when you look at what, for example, Chile just did, nationalizing their lithium mines, I don't think that's a stretch at all. And you wonder if they even ever purchased the stuff to begin with, if they just hedged it. And this is really, I think, the type of powder keg that could blow things up, where you have, large short positions in commodities when the world is de-dollarizing and in search of tangible commodities, real things, moving away from debt instruments. Again, I always bring up with you Zoltan Pozar, it's not just gold and silver, it's commodities. If you look at what the other countries or what China is accumulating right now, it's not just gold and silver, it's other things as well. And they are owning massive amounts of, of aluminum and of copper and of zinc and of, food stuff too, like wheat and soybeans, and they're accumulating everything they can in a commodity environment, where I think that is going to be the important thing moving forward. It's going to be less about taking derivative positions and trying to make a profit in these markets, and more about taking physical possession of them. And like, for example, I'll give you an example, and maybe I'm off on this, maybe I'm not, but I'll get your take. Everyone was freaked out a few weeks ago when JP Morgan put millions of ounces of silver into the registered category, pumping it up to 39 million from 32. Oh boy, they're going to flood the market. They're going to kill the price. But where is the registered category right now? It's just barely above 30 million. It's at really its lowest level since the silver squeeze. And so they put it in there because someone said, no, I want delivery. They put it in there in anticipation of knowing someone was going to stand for delivery, would be my guess. And now all of a sudden we're down to, the lowest we've seen in a few years. So that will be the name of the game. That's how these markets are going to blow up, is that it will cash settle. They will change the rules just like they did to the Hunt brothers. And that's when all of a sudden price has to go crazy, because the US exchanges are then viewed for really what they are. And that is, a casino at best and a fractionalized Ponzi scheme.
I like to call them bucket shops, where, that's where Jesse Livermore got his start. That you just bet on prices and there's nothing really behind it. And and I think the same thing with these ETNs could happen with ETFs. They could come out one day and say, oh, GLD is going to be redeemed. You're going to get cash because they might need the gold somewhere else. Same thing for SLV. So,
when you look at who's the custodian of SLV, well, geez, I mean, talk about the fox guarding the hen house. It's JP Morgan, who paid $920 million for suppressing the metals market, yet they run the world's largest silver trust. And HSBC Bank, God knows how many billions they've paid for financial crime, and yet they're the custodian of GLD. And I've always said that, to me, it would just be a perfect way for them to confiscate gold and silver if it really is there. But it would be much easier than going door to door without breaking any laws or infringing any civil liberties. They could just take those two funds, pay everyone whatever they had in dollar value, put it in their money market, and say, what, we didn't break any laws, we didn't infringe any civil liberties. The prospectus tells us we can do this. You have to be a very, very large holder of what's called a basket in order to redeem them. That's basically the commercial banks anyway. So you can go buy physical metal in the US. We didn't confiscate, but if they did that, they're sitting on what, the first or second largest stockpile of silver in the world, and the third or fourth or fifth largest stockpile of gold in the world, held with the pink bow wrapped around it, held by the cartel banks. Mm-hmm. So I think, they're not going to come and do FDR type of confiscation of gold and silver when, we're the pimple on the elephant's ass, the number of people who own gold and silver in this country. In 33, it was currency. Everybody owned it. So confiscation, plus people were patriotic back then. I think it's a whole different system now where the US is lacking a lot of trust, even with its own citizen base. And those that hold gold and silver epitomize that. So I think they'd be much better off not going door to door to people who belong to the NRA and lack patriotism than to have these two funds just deliver the metal directly to them and allowing them to have their cake and eating it too.
Oh, Andy, I just got one of my, this is called a crown, and it's from 1889. So that's 925 silver. And it's got the Queen Victoria. But I think it's just a little heavier than the dollar, because during the Napoleonic Wars, they ran out of silver here. So what they used to do, they used to get US silver dollars and stamp it with the king's head. So, wow. Yeah, no, it was the Spanish dollars. They used to get Spanish dollars and also US dollars. So there is a Bank of England dollar that they used in the early 1800s. But the Spanish dollar, they had the King Charles was the Spanish king, and they had the stamp of King George, but it was less than a crown. So it used to be two kings and not worth a crown. That was the saying, but it's interesting. And this is a half crown, so they're really, really nice coins as well. So that's the ones I keep here. Someone was talking here, asking a question, Andy. I mean, I haven't thought about, I try to take one day at a time. I do look at things and, what's going to happen. We got the FOMC this week, but what about end of June, beginning of July? Is there something coming up then? I guess it's the debt ceiling.
The Fed now, I think the Fed now comes out in July. It's the only thing I can think of. And I think that's kind of the precursor to there. It's the foray into the central bank digital currency. I guess I look at it as Zelle or Venmo on steroids, where you can transfer cash immediately, very similar to a Venmo type of deal. But I just think it's these little steps as we get closer and closer and closer to rolling out a CBDC. But this will allow for efficient payment, and I don't know to what degree it goes, but they talk about rolling it out in July. That's the only thing I can think of at this point.
Yeah. So some people are talking about Jesse Livermore. I've read a couple of books about him. He died at age 60. I think he killed himself. He committed suicide. But what I've heard is that Jim Sinclair's father was a friend of his, and he was bipolar. But some people are saying that he was penniless, but I don't think it was that bad. He left some big trusts to.
I'll send Jim an email and ask him.
Yeah.
Next time I come on, we'll see what he says.
He left some big trusts to his family, but I mean he made and lost fortunes many times. Jesse Livermore, he was an interesting guy, and I think his strength was mathematics, and he was like a computer before there were computers, and that's why he did well, I think.
Interesting.
Yeah. Oh yeah, just wanted to ask you about the Fed this week. Do you think it's going to matter, if they raise rates, or people are expecting them to raise? Maybe not now with this First Republic. What do you think?
Oh, I think they're going to raise. I think they'll raise 25 basis points. I think that in typical cartel fashion, they're going to try to knock the price down before the FOMC. They always do. You can see it by the huge short position right now that the commercials have in gold. I expect it to get knocked down a little bit here over the next couple of days, and it'll bounce right back up on Wednesday afternoon. And no, I mean, think about it. That's the thing that I find so interesting, is that a 25 basis point here and 50 basis point. I think he'll do one or two more 25 basis point hikes. I mean, they're at this point now where if they don't defend their credibility, what do they have? Everyone will think, well, hey, that was obvious. The bond market's been calling it forever. They're going to turn and pivot. Well, maybe they don't. I think they will raise them. But what is 25 basis points really? I mean, we're nowhere near the level of inflation. We're still real negative, and it isn't anything other than it's just hurting more and more the banking system. And these regional banks are in very big trouble as far as I'm concerned. And so as you have this banking problem and you're continuing to tighten, not to mention, they have a good number of bonds. I don't remember the number, but billions that are rolling off their balance sheet mid-month. They said they're going to continue to quantitative tighten. We know that they added all that back to their balance sheet already and pivoted the other way, so to speak. But no, I think that they're going to continue and tighten. They're going to raise rates, and part of me believes that this is what they want. They want the banking system to break apart. So I know Rafi's been talking about them not allowing the money markets into the reverse repo market, but why are they still allowing it? They shouldn't have allowed it. This is what is creating the stress on top of rising rates. And when you see as much money going into the discount window right now, that just is underscoring it, that the banks are in big trouble. The discount window, they added $4 billion to the week already. Last week, they have $74 billion at a very, very, very unfavorable, very unfavorable terms. And that means these banks need money right now. So that to me is something that people should keep their eyes on. That means that there are people that are redeeming their accounts and moving it. And so instead of selling toxic assets, they're borrowing money from the Fed. Well, that's just a Band-Aid.
Yeah.
So I think it's almost as if this is what they are trying to get at. And no, I think they will raise rates, and it's just going to add more stress to a banking system that's in trouble.
Yeah, I was reading today. I don't know if you heard of Dan Oliver. I've interviewed him before a few years ago, and he's talking about, this was from March 15th, and he said that if you look at this statement here, said the economic consequences are profound. According to Goldman, small and medium-sized banks can account for roughly 50% of U.S. commercial and industrial lending, 60% of residential real estate lending, 80% of commercial real estate lending, 45% of consumer lending. And he says the mega banks can easily open new deposit accounts, but they do not have the operational capacity to replace so much lending. They prefer larger loans to fewer borrowers. And so, I mean, what this tells me is that
they're crashing the system. That's massive inflation.
And the economy as well, because
right. And then you come in, everyone's penned into a handful of commercial banks. You look at the derivative exposure to those banks, and all the hope and wishes and money printing that the Fed wants to do wouldn't bail out the system if they all bust apart. And bang, you come in on a new white knight with your new CBDC and say, we'll make everyone whole, just accept this new currency. Yeah. And that's exactly what Lael Brainard's thesis is: blowing up the banks, getting rid of all of the banks, and going direct to central bank digital currency, modern monetary theory. Then, of course, she was at the Treasury, then the Fed, and now she's an economic advisor to the president. You couldn't draw it up any better. Get everyone out of the commercial banks, pen them in the commercial banks, and then let the thing blow up. And there's your reset, and there's your new central bank digital currency. Let's hope it doesn't come to that. But yeah, I mean, it doesn't make sense why they're doing this, because this is exactly what they're incentivizing.
So this is what he says here at the end. Dan Oliver, he says, Powell has lost, like Arthur Burns in the 1970s. He was chairman of the Federal Reserve in the 70s. He has discovered that abruptly higher rates threaten stability long before retail prices stop rising. At this point, it is hard to know which is better for gold: more rate hikes that accelerate a major banking crisis, or a pivot to more money printing now.
I couldn't said it better myself. And that's exactly the pickle that they are in.
Yeah.
That's exactly it. And there's no way out of this. It's either inflate or die, or default, or die, or blow up. I mean, and that's
Russell, I think.
Yes, that my mentor, Richard Russell, inflate or die is what he always said. But that's true. And you can see that, look, these guys can't be that stupid to realize allowing all this money into the reverse repo market. Rafi showed a graph on one of his podcasts where the graphs are the same. The reverse repo market, the money market, the graphs are the same. And it's all of the money markets going into the safety of the Fed. And that's why these regional banks, after Janet Yellen said they're not going to be protected, everyone's leaving. And why would you stay there? Why would you? And so, yeah, I just think that this First Republic is just going to remind people. Of course, they're going to try to smooth it over real quick, but it doesn't remove a bigger issue, a bigger problem. And until they stop allowing these money markets to invest at this higher rate, and we're told that they're not going to fail because they're too big to fail, well, you're going to see more and more of these people pulling out as fast as they can. And that's why you see money at the discount window at these unfavorable rates. It's either that or sell more assets that blow you up. What do you do? So
yeah, I
they're
put
damned if they do and damned if they don't as well.
I've put a link to that research for the viewers on the comment box. And what Dan Oliver also said is that in the '08 crisis, the problem was that mortgages were resetting, the subprimes, and the consumer, got hit really hard. But in 2021, rates were really low, and consumers, people who took on mortgages, who borrowed, they were able to fix it. But now the problem is that the lenders, they lent out at 3%, and now rates are like 6 or 7 in mortgages. And that's the problem. It's the problem for the lenders, and that's why the banks are in trouble. And he thinks that you could see next insurance companies in trouble as well, and other financial institutions. So it's not just the banks.
100%. I mean, people don't talk about the insurance companies, and they should. Where do you think they invest their money? In stocks and bonds. And so they're in rough shape as well to boot, and people don't talk about that enough. I think that is certainly one of the big dominoes to fall in this situation. And all of this only focuses on what's going on inside the US. And there's a greater story, as we've talked about a lot, going on outside the US, this de-dollarization, the pressure that's putting on the dollar, the ramifications of what happens when all of those dollars come home. And that's the thing that people are I think, ignoring. That to me is the biggest issue of all. That, when you see things like Macron striking a deal with China, 51-point deal ranging from 5G to military engagement, when you see Mexico joining BRICS, when you see Saudi Arabia joining the Shanghai Cooperation Organization after already joining BRICS and telling everyone at Davos they're open to taking other currencies for oil after signing a military agreement with Russia. Let's not forget the Shanghai Cooperation Organization is the largest regional military and financial organization in the world. You're being backed by the Chinese army and by the Russian army, being in BRICS and being in the Shanghai Cooperation Organization, and signing deals with Russia for military cooperation, and all of the things that could happen if we suddenly lose the reserve status, the petro reserve status. And to me, that really is the scariest thing of all. And you have to be blind to not see there is no reason for Saudi Arabia to make these provocative moves, if not for them to be repositioning until they have everything in place to make the admission. And why would they want to continue to only accept dollars for oil when we know we're going to inflate it away? That's what we've done forever. That's what all administrations do. We can't get tougher. We blow everything up. That's what this conversation is. They're going to continue to inflate the burden away, put their money into treasuries, which have been getting eviscerated, and do this with a country that's going green when they can work with the rest of the world, almost 80% of the world that isn't going green, and has a different view upon the Western hegemony than the West does. And I think that when that moment happens, everything that we talk about with 25 basis points and 50 basis points and this micro analysis becomes moot. So there's a lot of balls up in the air, Mario, and I think that you could argue it's almost as if the moves of the West are accelerating and almost fostering the de-dollarization and the ultimate moment where the rest of the world looks to an alternative for the US dollar, at least in terms of oil purchases. And I think that's coming.
Yeah.
Then it's a religious experience as those dollars come flooding home, as every country in the world's had to own them since 1974 in order to buy oil. Yeah. And I think those days are coming to an end. Not enough focus is being made upon that. And I think that would be the knockout punch that catches a lot of people by surprise.
Yeah, and it will affect not just the US, but countries that have big dollar reserves. I mean, 60% of foreign exchange reserves are in dollars. Like here in the UK, I was looking at some of the data. We have loads of treasuries, like 200 billion or more. We have very little gold. I don't understand why they're not selling those treasuries and buying gold.
I think their countries are. I mean, if you look at last year, the dollar in terms of its percentage of reserves fell at 10 times the average speed of the past 2 decades. So we are seeing de-dollarization. And I saw a great quote the other day. It said the dollar is still king, but the guillotine is waiting. Yeah. And I think that is happening. And it's our
what I meant is not here in the UK. They seem to be asleep about what's going on.
Well, I think it's interesting because you see your neighbor France, they're looking at things a little bit differently. Not only did they strike this massive deal with China, but they did a huge liquid natural gas deal in yuan. So I think that you're going to see countries break rank. I mean, I think you could see Germany do the same thing. They're already angry at us for the way things have been handled with Russia. And I would not be surprised to see countries start to break ranks. Look at Mexico. Look at the rumor with Australia, New Zealand, Japan, and Canada. They're all rumored to have interest in joining the BRICS. That doesn't leave very many in the Western Alliance. It's the US and the United Kingdom and a couple stragglers. I mean, look, a lot of this is what if, but at some point it becomes every man and woman for themselves if this kind of stuff happens. And if you look at the pieces that are being put into place where Brazil says, the guy says, the president of Brazil, he says, every night before I go to bed, I ask myself why all countries have to base their trade in dollars. And so, you got these things that are happening around the world where we have, I think, lost the good graces of a good portion of the world. And that is the one thing that I focus more on than the minutia inside, but what's happening inside is a little frightening.
I just saw this, Andy, today.
Well, that's payback right there.
Yeah, they're saying it's because they're concerned about the protests, but the French have been protesting since 2017. It seems like
it's payback. Yeah. How dare you strike 51-point deal with China right now, and how dare you use yuan for a liquid natural gas transaction? That's exactly what this is. The minute I saw that, that's what I thought.
Oh, you've seen that already, yeah. It's weird because the Brazilian president, he's very left wing, and Brazil is divided like the US. I follow a little bit of stuff from Brazil because I grew up there, and
I didn't know that.
Yeah, but the people on the right, they're really angry about the new president. But I actually think the fact that he's trying to make the Brazilian currency more sovereign and independent is a good thing. And I don't care if he's a socialist or not. And these people don't seem to get that because anything he does, they'll go against. But I saw that comment as well, and that why should people use the dollar? If Brazil is buying stuff from Ghana or from China, they should use their own currencies. But that's why I think gold is going to be so important, because you want to deal with a country that has gold, because if you accept their paper, it has to be a currency that is serious.
Right. It solves the biggest problem of economic trust. If you don't trust a nation, if you don't trust each other, you're not going to trust their paper or their markets, or in the case of the Bureau of Labor Statistics, the numbers on inflation, or any of the things that I don't trust so much. I'm sure other governments feel the same way. And you have to ask yourself, well, why the hell are they buying more gold than ever before? Well, geez, I wonder. I mean, gold will be part of the new system. And I think you get that. I get that. A lot of people don't get that. And they're too fixated on the price. And, the price is, I mean, let's just call it what it is. It's been a manipulated market forever. You can only manipulate a market for an extended period of time by pushing in the direction it's going. It's never really got started until now. And now there's reason for it to run. And that's why you're seeing the massive acquisition by the central banks who are using the suppression of the West, who use the suppressed gold market to support their bond market, because the real values move inverse of each other. And they have been doing that forever. And the rest of the world is using that against us right now. And when that gold moves to the east, it'll never come back. He who has the gold makes the rules. And, one of these days we'll wake up and the price will be so damn high, people won't believe it. It will go from where it is here to straight up. There will be $200-300 moves in a day. It'll happen on a Monday morning. It'll catch everyone by surprise because it's the gold market is like a dog you get at the pound that was beaten before you rescued it, and every time you go to pet it, because it's waiting to get beat again. Well, that's what we all feel like in this market until we don't. And the people who've got this kind of money, the central banks, I mean, forget about the money. How about the information, right? Forget about their buying it, but why are they buying it? That's the question people need to ask themselves. Why? And I think that is it's easier to start from that premise and work backwards. That, well, hell, that makes sense why they'd want to suppress the price. If I only need $7,000 in my margin account to control a 100-ounce contract of gold, what if I'm a central bank with $1 billion in my margin account? Now I control $30 billion worth of gold. Notionally, I can suppress the paper price, buy up all the physical everywhere I can find it, have people all around my administration buy up everything they can buy for us, and then paper over the short position. Or until that short position says, no, I want delivery. That's when the game ends. And when you look at only 30 million ounces in the registered category in silver right now, we're getting close to that moment. And I don't know when it happens, but that's what they're doing. And I think that's what they've been doing. And that's how they've accumulated so much without the price going to the moon, because you get almost 30 times leverage on a COMEX contract. You can suppress price and create a perception of reality that allows you to gobble up the physical and then paper over your short until you can't.
Yeah, I worked as a futures and options broker for 20 years in the government bond market, not gold. I bought my first Krugerrand in 2002, and then I started following the price because I was sitting at a trading desk all day, and I could see right away that there were shenanigans going on. But going back before 2002, at the time, I thought it was weird. I had a client in Italy, a big bank in Rome, and they used to just trade bonds and interest rates, but they had a 400 gold contracts short position on COMEX, and they used to just roll it over all the time. And one day there was an increase in margin, and I called the client in Rome. I said, look, they're increasing the margins. It's quite a big move, quite increase. Are you gonna send the money? And she said, oh, don't worry about it. The money's coming. And I thought, that's weird. Why she doesn't even care about it. And then when I bought gold 3 years later or so, I thought about that, and I thought that position was probably for the Bank of Italy or something. And they don't care if there's a margin call because they've got all the money in the world, and so they just send that. So yeah, they do that. And but I think what they want to do with the futures as well is get people scared. The small investor, they make it volatile. We get here, near the 2070 high, and they smash it, and people think, oh, it's going to go down now, and
Exactly.
because if they could suppress it forever, we'd still be at $35 per troy ounce. They just they can't let it go up continuously, because then people say, whoa, that's the place to be. But if you look over the long term, it has gone up continuously. But a lot of people don't jump onto the gold or silver train because they think it's risky, which is totally upside down, I would say.
Yeah, well, and I was looking for something. I can't find it as you were talking. There's a guy named Dimitri Speck. Are you familiar with Dimitri Speck?
I've heard the name. Yeah.
He has some amazing charts, and it would be very interesting. I think it would make sense to you in the UK, because basically what he did was he took a graph of he made a graph of 10 years worth of data, trading time, 10 years, and put it into one graph. And basically it would be like this. Here's the UK, and it's like this. And then the AM fix, it goes like this, and then it goes up, and then it goes PM fix like this, every single day.
Oh yeah, I think he did the chart of gold only during US trading, and gold would still be like at $400 an ounce if it didn't trade outside US hours. Something like that.
See if I can find it real quick, but I don't know if I can. But the point of it is that, when you talk about the management of the market, of the metals market, it's managed in the UK every single darn day at the AM and the PM fix.
Yeah.
And so this is the kind of Western suppression that's going to come to an end at some point. And then once I think you could arguably see a different part of the world being responsible for quoting the worldwide price of gold and silver, and where the COMEX, because in a situation similar to what you were saying earlier about the ETNs, it just, because you can't take possession, that it just gets rendered obsolete or a scam. And
I think the Russians want to do something called the Moscow Standard, don't they?
That's exactly right. That's exactly right. I'm just seeing if I can find this. It's such a neat graph, but
I remember as well, when I followed at work the gold market, that around 1:20 p.m. London time is 8:20 New York. And why is that time important? No,
that's the PM fix.
No, 8:20 a.m. New York is when the COMEX regular hour starts, and all the time, like 9 out of 10, they used to come in and smash the futures price, and then silver used to start at 8. It still does, but it trades almost 24 hours, but they still have the regular hour starts. Yeah, and I could always notice, they do a fixing, is 10:30 London, or 10 o'clock London, or 10:30, and then 3 p.m. But they are also the COMEX open, regular hour open. I always noticed that they smash gold and silver. And I actually contacted a guy that was UBS. Well, he used to be the bullion trader there, and I had a Bloomberg terminal, so I just messaged him and I said, how come gold always goes down at these times? Is it, it looks like it's manipulated? And he came back to me and said, no, what are you talking about? And
I just found it.
His name is John Reed. He used to work for UBS. Now he works for the World Gold Council, which is basically run by the Bank of England, I would say.
Can I share my screen?
Yeah, let me enable it here. Yeah, go ahead.
All right, hold on. Let me do this. Give me 1 second. All right, can you see my screen?
Yeah.
All right, watch this. Take a look at that graph.
Yeah. Oh yeah, that's the.
So that was 10 years worth of time put into one graph. This was a presentation that I made at the Sprott show in like 2018 or 19. You can see that that's 10 years worth of data put into one graph, and at the AM and the PM fix over a extended period of time, that's what it look like? And, that's not how markets work. That's not how free markets work.
Yeah.
So it travels up as it goes eastward,
Yeah.
gets smashed at the AM and the PM fix. And
You see here,
sideways.
just after 8 here, that's the COMEX open as well.
Yep.
Yeah.
And that's what you were talking about.
Yeah.
There it is right there. This one right here.
Yeah. But it looks like the PM fix, what happened after the PM fix is that the physical market in London closed.
Yep.
So it was really easy to come with the futures and smash it. So it was done on COMEX. The other thing that changed in the futures market, and this changed in the late 90s, early 2000s, and when I started in the futures market, everything was done in a pit. So even, on COMEX, gold was traded in a pit on COMEX. So after it went screen-based, you couldn't cut, when you're in a pit, if you kept spoofing with thousands of contracts, the other traders would say, this guy's BS, but when you do it on the screen and no one sees who's doing it, and I think, so the futures industry changed a lot at the turn of the century. It went all electronic, and I think it makes it even easier for them to manipulate it. And spoofing is something that could never have happened in an open outcry situation, because people would say, what are you doing, spoofing like that, thousands of lots, and you're not prepared to sell it or to buy it.
Well, they'd have to instantly cancel it, right? So
yeah,
that's right. Well, there you go. It's the high frequency trading that's controlling the markets, and that'll be the death of them at the same time. You'd be on the wrong side of this trade, and very quickly you can end up in very, very big trouble. That's what happened to Bear Stearns. They were on the wrong side of it, and they went belly up when silver went to $21 an ounce. That was a good part of the reason why they went upside down. So that's what I mean by you can only manipulate it for a long period of time by pushing it in the direction it's going. You see the world accumulating it. The wealthiest, most sophisticated, closest to the information entities are accumulating it. It is a dangerous place to be short right now. And it speaks to really the desperation of the West to maintain status quo. It doesn't seem like it's going to hold.
Andy, we're going to wind down. I usually do this for an hour. Maybe you could tell the viewers how they can get in touch with you, and if you've got any special deals coming up this week for gold and silver. And
we hope to actually, I'm really crossing my fingers and hope by Friday or next Monday at the latest, finally our new website gets launched. And we've actually done a little bit of a soft launch here a few days ago inside our office for our brokers to find flaws in it. As I mentioned, it's just been an awful experience. In the meantime, people can email me at info@milesfranklin, and certainly mention that Mario sent us, and request a up to the moment price sheet, which should be as attractive as just about anyone in the United States. And any questions that you have, let us know. We will answer them. We will reply back promptly. If you want to be contacted, that's great. So just send us an email at info@milesfranklin. If you just want a price sheet, that's great. If you have questions, put it in the email, put a phone number on there, ask to be contacted. And otherwise, we will just send you a non-obligatory price sheet with our current price listings.
Great. Thank you, Andy. And hopefully it will be an interesting week.
I think it will be, Mario. I really love doing these with you, and I'd love to come back because I have a feeling that things are going to start to accelerate in terms of, the old Chinese curse, may you live in interesting times. I really think it's going to be an interesting summer and into the fall. So I look forward to coming back and picking up where we left off. But as always, it's great to see you.
Oh, yeah. And thank you for giving your time to come on my channel.
Love it. Always will.
Take care.
You too, buddy.